The stock market, the endlessly undulating estimation of humanity's belief in the valuation of public companies. You've come here because you want to know the first steps of being a good investor, and I'm here to help with my 5-step routine from a 13-year experience of analyzing the stock market daily. Number 1, read. Here's a splurge of the most useful books that I've read in my 13-year experience, and it's more than 100, some of which I've read multiple times. Even if it's 20 minutes at night time, that 20 minutes is valuable and it'll help avoid falling prey to the common pitfalls of investing. Number 2, open an account via stockbroker or major bank. It's really quite simple. You just have to get started by opening an account, but various firms offer different charges for doing so. The Motley Fool very conveniently offers a rundown of the top firms and the charges, so you can choose the one with the lowest fees. You may also open accounts with multiple firms as some of them have access to other countries or some stocks which others don't have access to. Make sure you also open a tax-efficient account such as Stocks and Shares ISA, which will allow you to keep your profits tax-free. However, currently the limit in the UK for investing per year in such an account is £20,000 per year. Furthermore, consider a virtual account initially, say for the first month, so you get the hang of making decisions. Number 3, use a wide-ranging, easy-to-understand research tool which includes a stock screener to help you make decisions. The one I use most is Stockopedia. It helps break things down really simply for me. It shows trends effectively and has access to key financial metrics. Number 4, read the most useful newsletters and websites on a weekly basis to keep your finger on the pulse of what's happening. These are some great resources. I personally only pay for Stockopedia, and the other sources I just use for free, and it helps cut down costs dramatically. Last but not least, number 5, start with baby amounts of money, say a couple of $100s worth. So an early heavy loss can be critical, and it could wipe you out entirely and make you never ever come back to stocks. Finally, here's an extra tidbit. One of the most useful pieces of advice lies here in your brain: psychology. So you've got to develop an idea of what sort of investor you want to be. Do you want to be a more long-term investor seeking out undervalued targets? That's kind of more what I am and what I personally feel comfortable with. Do you want to take higher risks and focus on timeframes of 1 to 2 months looking at volatile stocks, seeking to profit from price movements? In that case, you'd need to really be researching daily and keeping up with market news on a daily basis. This psychology is something which develops over time, and of course reading will help with this. So there you have it, my 5-step method. If you found this video useful, well, check out these 2, you might find them just a little bit interesting. And remember to like and subscribe for more content.